few more minutes here. I did want to bring up real quick, if this is your first event with Entre, a little bit more about who we are and, you know, what we're doing. My name is Michael. I'm the CEO, founder. We're a social network for entrepreneurs and really the future of work. So we really believe that, you know, the future is startups, freelancers, entrepreneurs, and really this, you know, flexible remote work that we're starting to see now. And we want to be the hub and the platform to connect and help all of these people really just start and build their businesses and really their careers, or, you know, their kind of freelancing careers. So we do a bunch of events. Obviously now they're virtual with amazing speakers like we have tonight with Beth. We do panels, interviews, all sorts of different things, workshops. We have another one coming up with Philip on how to build apps and stuff as well. So that will be fun later this month. And yeah, I mean, we're all just about helping and supporting entrepreneurs. So, you know, we just rolled out our app. Right now it's early access. If people want, we're kind of just slowly moving people into that from our network, invite only. But if you guys want to jump into that or want to download it, you can just go to our website and sign up. And then after tonight, we're going to know everyone that was in this event was from this. So we'll just give you guys the link to download the app. It's just joinentre.com. And yeah, I mean, we have a bunch of exciting stuff coming up. We have a few other really cool interviews with Charlie coming up. We have a real estate event next week that Charlie's going to be hosting. And let me get some more people in here. Okay. And yeah, that's pretty much all I wanted to say about Entre. And if anyone needs help with anything, if anyone's like struggling or whatever, let us know. We want to help. We want to connect you with whoever you need. And then, yeah, I'm going to pass over to Philip, and he's going to share a little bit more about Ideamotive. And then I'm going to pass it off to Charlie, and we'll kick things off here.
Yeah. Hi, Mike. Thanks for that. You know, today talking to my client, I find out that meeting me, according to her, was apparently something that saved her the most money anything else would for her in last year. So maybe at least for one person in this group, listening to those 2 minutes is going to be as beneficial. So I represent Ideamotive, company based in Warsaw, Poland. What you can see behind me, and we build software for startups and for companies different size, and possibly startup or company like yours. And very often I hear from my clients that building web pages, mobile apps, software in general is one of the most expensive things in their early stage budget. So it was for our client from New York City, vUniverse. To optimize their costs, they had different software providers around the globe, South America, Asia, Eastern Europe. But after a year working with us, whenever they needed more software, their CTO would be like, hey, we need Ideamotive on that. And we became their unique provider. And I believe it's because our engineers, those from Poland, aren't any different than those from American universities, but they're twice as cheap. So does it really make sense? The only downgrade here is the 6 hours difference and the fact that it's midnight already here. So does it really make sense to pay double just to work in the same time zone? So if you think you could benefit from that, just give me a call. And Mike, if you could just please put the link to the scheduler with me. And if we can have just a conversation and see if we can help each other, it would be great. So I'm looking forward to it. And if just talking to me doesn't convince you, maybe $500 will, because this is how much we give away to this amazing community, to Entre. And when you schedule, and you're one of the first people to schedule a call with me for this week, we give you $500 for our services, which is consulting, software, or graphics design. So hopefully this will help you grow your business. Can't wait for the talk today, and good luck. Have a great night.
All right, thanks, Philip. Yeah, definitely take him up on that offer, guys. You know, we have a special partnership with them. So people who are building apps and stuff can get $500 towards their project, so, or company, whatever that they're building. I'm going to drop the link here in the chat for everyone. And without further ado, I'm going to pass it over to Charlie. There's the link there for everybody.
Thanks, Mike.
I'm going to pass it over to Charlie, and we'll kick off the interview. I'm super pumped. I got my notepad ready here to take some notes, and I'm super thrilled to have Beth on board.
Awesome. Thanks, Mike. Appreciate it. Beth, welcome to the Investor Series panel or talk tonight. I really appreciate you being here. We have about 45 minutes, so I want to try to make this as condensed and as impactful as possible. So I just want to make a note that we're going to stop at 7 o'clock, and right around 6:45, 6:50, Mike's going to do a little Q&A. So put the questions as they come in the group chat on the side. So without further ado, Beth, thank you for coming on the show. Appreciate it.
Oh, thanks for having me.
Absolutely. So I want to we're going to jump around your past experience, what you're doing now, kind of opportunities to collaborate, because that's what we want to learn about, what you're doing, and hopefully people can reach out with good opportunities and we all could work together. But let's just kind of jump into FirstMark Capital. You invest and partner with entrepreneurs that focus on meaningful problems. I want you to kind of dive into what you're doing at FirstMark, and also let's lead that into what's going on right now with the civil unrest, the protest. And I mean, we have a lot of problems right now. We have COVID, we have a pandemic, we got a lot of different things. So let's talk about what you're doing at FirstMark Capital and how you are investing in those entrepreneurs who are solving the meaningful problems.
Yeah, sure. So FirstMark is a New York-based fund. We have about $1.5 billion under management, and we invest across both the consumer and enterprise ecosystem. So we're a generalist firm. What we like to do is invest early. So we invest in seed and A stage companies for the most part, and be a real partner with our companies. So we're active, take board seats. We have a large platform team that helps the partners support the companies across corporate relationships, talent, acquisition, community building. We do over 100 events every year. And, post-COVID, we started to do them virtually, which has been a new experience. So it's a very collaborative. So we like to, we invest all over the world, but we love to invest where we can get to our companies easily. So, a lot of that is New York based or Northeast corridor based, but we have, many companies in other parts of the world as well. From the standpoint of what I focus on, so because of my background, I see and spend a lot of time in the consumer space. So, across the, new social platforms, whether it's, consumer fintech or, across that piece, as well as, G2C and other spaces. But where I've been spending a lot of time and, post-COVID is actually starting to highlight some of the challenges in this space is what I call the supply chain around, the value chain around supply chain. So from making products to shipping products and everything in between, it's an area that I spent a lot of time in my career thinking about as the COO of Etsy and Fab. And, it's still pretty broken. There's, whether it's inside the warehouse and the processes there, or, last mile, or, customer service platforms or things like that. Spending a lot of time there, and obviously, the future of work and how not only how companies work and how they can work more efficiently, but how we're collaborating. And that's also, an area in this climate, which obviously has a lot of focus on. Yeah,
well, the collaboration issue, topic, I think is a good topic to talk about, kind of what's going on with the not the riots, but the protests, more so to, for civil justice. How possibly are you collaborating? How are you investing with these founders that are changing a little bit what's going on? And I think the supply chain kind of falls on the other side of it with the pandemic. I'm sure there's opportunities there, but with what's going on today, how are you looking at both sides of this?
Yeah, I think you had the first sort of the first blow of COVID, and sort of thinking about that, and the first wave of things that we were doing about is making sure that our portfolio was in the best place that they could be, and whether or not they, needed to shore up their balance sheet or think about planning in a different way and sort of being their partner through that. And, post that, I'd say, we continued to invest the same way. I think there was a big adjustment on, we're so used to seeing and meeting people in person and having that interaction and moving towards Zoom. And that's, it's a learned skill. Zoom is completely different than, meeting someone across the table. And, some sort of small, subtle things that make a big difference of whether or not you're in the screen or a small, small screen, and how to think about keeping that audience really engaged, because it's much harder to do that on Zoom when you can, move to checking your email or, you get distracted at something in the room. Now, post, the last week's events, it's hard to say how that's changing how we invest, but it has opened a lot of conversations. So from the standpoint about race and equality, that's something that, I think me and all of my partners have thought about, but we never had an open conversation about it. And, now we're having that conversation both internally and externally. So, FirstMark earlier this week put out a statement around sort of how, we're thinking about it and what we're doing about it. But I think it's sort of in these big moments for social change, it starts with that conversation and that internalization around what's actually going on versus sort of like, it's not about me, it's somewhere else. We don't have to think about that.
Yeah, well, we have to open up those conversations, absolutely, to make the change. So that's good you're starting there. For the, we have a group of entrepreneurs in the Zoom meeting right now, just regarding a few things, kind of bringing it back. And we'll talk about investment and raising capital, but I just wanted to give context, kind of your history. You touched on, you were an operator with Fab and Etsy. But you started in finance, you went to venture, and then you spent a decade in operating and then came back to venture. Can you kind of give us some lessons learned throughout that process? I mean, you had some great mentors, which we could talk about too. But, some of the biggest things that you've learned from the past.
Yeah, I mean, I think the first sort of aha moment when I was working in finance, it's sort of, most people go that route because they just don't know what other route there is. And I had this like big aha moment when the leveraged finance market collapsed and the firm that I was working with was starting to work with entrepreneurs. And one of the entrepreneurs, instead of raising equity, raised debt. It was the first time I had really spent any time with a company that was like excited and building and just everything seemed like there was no sort of cap on what this company could do. And, this was back in '98, and there was an ISP in St. Louis, Missouri, which, you wouldn't think that would be sort of like the classic case of this sort of like entrepreneur zeal. So when I came back, I'm like, I got to work at a startup, and like, this is going to be amazing. I want to be a part of something like this. And in my quest, I found one of the first firms on the East Coast to focus on investing in the internet, Flatiron Partners, and literally wrote them a blind cover letter. And fortunately, to the right partner who actually answers those kinds of things, and got sort of a opening to have a conversation. And the first conversation was like, look, you're great. Maybe you could work with one of our portfolio companies. And, over about a 6-month period, got to know them and eventually was hired as their first associate. So it was, and that was sort of like the first breakthrough. The second was, that was right before the dot-com boom and then ultimately the bust. And so I had this like great seat as someone who's fairly junior to watch like all of these companies. So whether it was, a lot of the companies are not in existence today, but like, lots of great, companies like, anyway, but like they, had that experience, and then also the experience of what we're starting to feel now of like what happens when things sort of collapse and what happens to those companies, and which companies survive and which companies don't. How do you think about those things? Which some of those lessons are a lot of the things that we're talking about very recently. Fast forward, that experience was pretty formative because the venture community collapsed, and so there was less than 50% of those who were working in venture in 99 still working in venture in 2002. And so that was sort of a wake-up call of like, well, what do I actually want to do? What are the skills I want to build? And that was sort of the impetus to go on the operating side. And it was a great ride. I mean, I loved it. I always had an eye to go back to venture, but I probably spent more time than I thought I would on that side, and it was great. And I had an opportunity to be part of the leadership teams of two companies that were high flying and fast growing. One that's almost a $10 billion market cap right now. Etsy, I was the 12th employee, was there for nearly 4 years, and saw almost 40x growth in that period of time. And then, one that sort of crashed and burned spectacularly after raising $330 million in 18 months. So lots of lessons on both sides of the table.
Well, let's pause for a second. With Etsy, you were the 12th employee, and you were on the operation side. You obviously helped scale the company tremendously. What do you look at as an operator to scale companies, as entrepreneurs, startups are listening in? What are some tips on how to break through and hit those benchmarks along the way?
Yeah, I think it's about business model and product market fit. And we always had product market fit at Etsy. There was always a market that was just itching to be on the platform, both on the seller and buyer side. And we also had a really fortunate place that a lot of our buyers were also sellers. And so they were like very much a part of the ecosystem. And when you have that magic, and sometimes it takes a little while, but in Etsy's case, it was just, they had it right off the bat. You can do a lot, but until you have that sort of magic that, $1, what $1 in means coming out the other side, and that euphoria of your customer base, it's hard to think about scale. So making sure you get that early. And we see a lot of companies that, are going after spaces that are really exciting or potentially lucrative, that raise a lot of capital. It doesn't matter how much you raise unless those customers are really excited about your product.
Right. Let's talk about raising capital a little bit as you bring that up. What are some of the tips that you give potential entrepreneurs or startups that are approaching you to raise capital? What's the process that you go through and that you possibly like to see if someone were to approach you with a deck or whatever it may be?
Yeah. I mean, first and foremost is like, what's the story you're telling? What's the vision of the business? Why should the other person across the table believe? And that narrative is really important. One, it keeps the person on the other side captivated to learn more, because ultimately you need to draw them in to make sure that they really understand the business. And two is being very transparent. So if we talked about product market fit, and some companies are just on their way, they've learned a lot and now they're figuring it out. And I think being very open about where you are as a company makes the conversation much more productive. And it also makes it much more real, because the person on the, person making that decision is going to figure that out. And so I think there's this impetus to just be like, everything's great and up and to the right, and it's going to be fabulous, and don't worry, just write the check, it's going to be fine. And most, investors, understand it's a long, where entrepreneurs are creating something out of nothing, and that road is not an easy road, and there's lots of bumps in the road. And part of being an investor is linking arms with you and understanding that that's going to be the case. And so it's really being transparent about the learnings, and also thinking about how are you going to build the best team possible, whether you have them on your slide today or not, but articulating that in a way that the investor who's evaluating the opportunity can really get on board. Because ultimately at the earliest stages, this is all about people, and how do we navigate the challenges and take and capitalize on the opportunities and move forward.
So let's stick with that, building a team, hiring, culture. I think that all kind of plays in the same bucket. What do you see as you possibly get the funding as a startup that, you've given an investment, now they're starting to scale. How do you look at hiring? How do you guide your founders and entrepreneurs to getting the right fit and getting that right team to grow?
Yeah. So I say that the founder CEO of a company has 3 jobs. One is to keep the company capitalized, to raise capital. The second is to keep the vision of the business and hold that vision. And the third is to recruit. And this recruiting piece is really important. I think there's 2 things. One, it's a very sort of sharp look at yourself to understand what your strengths and weaknesses are, and making sure that you bring people around you to shore up those weaknesses. And they can be in any form. It could be, if you're more of an introvert versus an extrovert, getting someone on the team that's more extroverted to sort of do some of that, whether it's customer relations or, internal stuff. If you're very product focused and it's a sales and marketing game in your business, making sure you can get that best person on board. But I think and this is really hard to evaluate in the early stages of whether or not people can be great recruiters of talent, because a lot of times we are trying to convince people to leave pretty lucrative jobs to come and take a flyer on whatever we're building. But we try to help on that front. And so hope that having, a good capital provider behind you and, support around recruiting other great people around you as well will help the founder get those people over the hump.
Right. And I guess when you're recruiting, you probably have to build a strong network to get the right people. We'd like to talk about networking. This is a social platform for entrepreneurs to, network. And there's a networking event after this to link people up. How do you build the most meaningful network? Because I don't think necessarily the most people is, the best. Maybe it's the right people. Like, how do you look at networking? How do you follow up with people within your network to apply?
Yeah. I find that the more specific you are about what you're looking for, the more the universe kind of gives to you. So, if you're like, I'm looking for this specific type, I'm looking for a CFO, and the CFO needs to be, very strategic and be very specific, you start to see doors open up and people sort of connect. The other thing is that being very open around, or very direct about wanting to meet people and other people's networks. So I'm always impressed, and this is something that I don't do particularly well, of someone who will call me up. We have a conversation like, hey, these 2 people, do you mind introducing me? This is why I want to talk to them. And, people say, oh, it's really hard because my natural networks don't, lend themselves to X, Y, and Z. If you start to think about what you're looking for, building, starting with like, hey, I'm going to call you Charlie. Charlie, 3 people. I talk to them. They might introduce me to 2 other people, and it starts. So it's a lot of work. And I'll give you an example. So when I was at Fab, I went from 100% 100% drop ship business to all of a sudden I was building warehouse and needed to ship the products themselves. And I'd never done anything like that before, and had to build a team and sort of recruit. And I built sort of my own personal board of directors to like help me through that. So I networked to the COO of Overstock and the COO of the ex-COO of Gilt at the time, and a few other people that when I was going through like big serious questions, I could just call them up and build those relationships. And I think you can do that, sort of in, any category or any sort of area that you need help on.
Well, how about the strategy to get to those COOs or investors, or whoever it is? Did you cold email, or did you actually take that strategy that you just told us?
That I just said. I mean, okay. I'm a believer in cold emails. I got my job in venture with a cold email. Right. So, I think that, I think the percentage of those that get answered are pretty low. But if you can get to, anyone who's in that sort of chain to get to, and I think the overstock person was one in between. I think the Gill person was two. And there was a few other people on that list as well. I ended up meeting the CEO, Wayfair, and others, in that process of sort of like understanding how these businesses work. But yeah, I would err, in the world of just people getting so many emails, getting something from someone that they know has a little bit higher, or a lot higher probability of getting opened.
Right. That's a good story, and with sticking with good stories. You've been a lead investor with some serious companies in your past with WME Ventures. You led Masterclass and Glossier, a bunch of other great startups that scaled. Can you give us a story on one of those founders, or the process on how they reached out to you and how they stayed in contact with you appropriately, and how you've seen them grow and evolve?
Yeah. Let's see. So I met Emily Weiss before she raised her first dollar. I was still an operator, and I think they were looking for sort of operational advice. She had just hired Henry, who was her COO, and we had a couple of good conversations, and we didn't stay. I mean, there was no reason to stay in touch with me because I was an investor. It was more about just like sort of being part of the ecosystem and bouncing ideas off of each other. And then when I made the transition to the venture side, we already had that relationship. So it was a very easy place to sort of squeeze ourselves into a really competitive round. So I think that helped. I'd say, one of the probably bigger examples of that, I'm trying to think of something else that I've done. I mean, most of the deals I've done, especially the ones that are most successful, are founders that I've known for a long period of time. So I'm an investor in, a current fund, Skylar. I met Kat Chen, who had reached out to me because she was running operations for Honest Company when I was at Fab, through the Wharton network. And it was cold, and it was like, hey, we're thinking about East Coast distribution. Can we chat? She came into the office. She toured our warehouse. Like, we did a whole bunch of stuff. That was in 2013. I invested in her business at the end of 2018. So like 5 years. So you wonder, there's like these relationships that last a fairly long time. I'd say, from the standpoint of those that you don't know someone for a long time, I think it's like, one, having the meeting, but having just like a regular cadence of like, hey, this is the update. And whether that's monthly or quarterly, this is what we said we were going to do. This is what we've done. So that person, like, and I read those emails, so that when you're at the point where you're thinking about fundraising, it's not sort of out of the blue or cold. I'd also say that, if you are really excited about a certain investor or a certain set of investors, letting them into the fold slightly earlier versus not, so they have a chance to like really think about the business and partner with you. Because it's really hard to sort of, if you already have your process like underway, and then all of a sudden it's like, hey, you have a week to make a decision for a Series A investment. It's just like not a great place. And it also, you let momentum take control versus whether or not who you want to work with take control, because it's hard to turn away a giant term sheet from a great investor. So I think about how you want to stagger and pace who you talk to based on the relationships you've built over time.
I like that. That's good. A good gem, I like to say. How about the opportunities to partner or collaborate? What are you currently looking at you've discussed consumer companies. You're focused on next generation commerce, consumer tech, mobile startups. What right now is on top of your mind that you potentially can collaborate with someone, possibly in the Zoom call, or if I have an idea possibly to share with you, just to get a better understanding where your mind's at right now and what you're looking for?
Yeah. It's a good question. I would love, from other than the things that I've talked about earlier or mentioned earlier, what I'm spending a lot of time is thinking about what do all of these physical and cultural changes going to mean on how we live, and what are the new products and services that make sense for us. So whether it's, we think about consuming media in a different way, or does our social graph change because we're not able to meet in large groups, or you mentioned collaboration, like what are all those tools? I think there's a big move. Like there's many companies I work with that thought they could never ever be remote, and they're like, wait, now things are actually happening, and we've been able to be productive from that point. What are the products and services to support people who have, whether they're, they have children or whatever, that, and to enable them to work at home, all of those kinds of things. And so I'm trying to, spend my time thinking about sort of where the white space might be versus, some of the other things that I already mentioned.
Yeah. So potentially someone on here has an idea that fits within that. I know you mentioned warm, I think everybody on the Zoom call is somewhat warm a little bit, still cold a little bit. But, in a cold email, I'm sure you've gotten a cold email that's led to a call or a conversation. What were the characteristics of that email? How did they lay it out? Was it a pitch deck? Was it a short email? Was it a good title line? Kind of what for you specifically
makes it happen, makes you respond. I'd say it's pretty short. It's like concise on what your business is. So think elevator pitch, but 1 or 2 lines. And I would, whether it's a full deck or an abbreviated deck, I wouldn't have anything longer than 10 or 12 pages. But something that's like, oh, hey, this looks really interesting. Let me click on it. Or if you have a website that that has some sort of demo or describes it in a different way, like that. I think those things are helpful. But I'd say very good subject line, sort of catchy, like name a company, this is what we do type of thing, and like a couple lines, and then like a very short description.
Then if it's too early for this company, potentially, what are some of the resources that you're giving to help guide them and give them advice on getting to that next step?
Yeah. Oh, too early for us to invest? Usually I'll talk about sort of, the biggest challenges are whether we really feel that this is a market that's big, or, they're thinking about the product in the right way, or, something around traction. So we give very specific advice for each company on, one of those dimensions. It could be just, we're not sure about something in one of those buckets and just want to wait, or is it just like, this probably isn't an area that we would invest in.
Charlie, you're muted.
He was like frozen, then muted.
Yeah.
Oh, there you are.
Mike wouldn't allow me. He wouldn't allow me to talk.
He blocked you out. He's like, that's enough.
We have very strict permissions here for everyone, but we're good now. We're good.
I think I was trying to allude to, are there any like podcasts? Are there any websites that you give somebody to help build their company if they're, not working? If they're too early?
There's a couple. Yeah. There's lots of resources on, building businesses. I think the hardest part about being an early stage founder is sort of the emotional journey you're going on. And I'd say, if you haven't checked out Reboot, it's Jerry Colonna's company that talks about sort of the journey around building these businesses and getting the product market fit and understanding who's on the other side of the table, whether it's your customer, your employees, your investors, like all of that stuff. It's a tremendous resource. Uh-oh, he's blocked. He's muted again.
Charlie, hang on.
Thank you. Sorry about that. I will not do it. You gotta understand, I got 3 babies under the age of 3, and it's, I guess, bath time. So I don't know if you hear the running water in the background, but I apologize for that. they're animals. Hopefully that's not coming in too loud. That's why I was putting on mute. Essentially, I think we're going to get to the Q&A pretty quickly, but I just was curious also. I think we have some investors in here too as well. What are some of the metrics that you look for when you measure your portfolio performance? And then also, I think that kind of falls into the line of looking at, startups that you're investing in or that you potentially look to invest in, the performance metrics, again, that you look for.
Yeah, I mean, it's a little bit hard of a question to answer across the board because I've invested in so many different things. But what I'd say is it's about, what's going to drive enterprise value and what's going to move the needle. So, in a consumer company, a D2C company, that's all about year-over-year growth. And, ideally, I'd love to see like 75 to 100% growth year over year, and, unit economics that continue to look better and better. On the, enterprise side is like, how are you, what's the pace of building your ARR and what does that look like? And, the same on the unit economic side. But, I think we spend more time thinking, or at least I spend more time thinking about what are the metrics or hurdles to prove out if they need to raise more capital, what that capital looks like. And if you're continuing to build enterprise value, sort of the metrics down the road at an exit sort of work themselves out.
Gotcha. Jumping back, something I missed that I wanted to definitely touch on, mentorship. I think you've had your fair share of good mentors along the way. You've worked with some of the best, especially when you talked about cold emailing, Flatiron Partners, Fred Wilson, I believe, right, is with them.
Well, I emailed Jerry Colonna, but yeah, I worked with Fred. Yeah, I worked closely with Fred as well.
Yeah. So what have you learned from, your mentors, whether it be Fred or anyone else? And then how do you look at mentorship, and how can these founders and startups, what should they be searching for in a mentor to further themselves?
Yeah. What I'd say is that, the best mentors I've had have all been super, one, authentic, and two, excited about what they're doing. There are very few people who are as enthusiastic about their job as, the two that we just mentioned. I mean, they just love the process of doing and working with companies and building and thinking, being intellectually curious. And it's a very exciting place to be. And so wherever you are, getting those people who are just like, would do this job for free if they could, like, that's where you want to be. And also understanding like where you take your cues from. So, you learn, and particularly in entrepreneurship and venture, these are very sort of like learn as you go, very entrepreneurial, but also apprenticeship jobs. And so, I'm not going to be Fred Wilson, but there are cues that I've taken from him and how he conducts himself, how he thinks about working with companies, what he thinks is important, things like that. And that you sort of take the pieces that make you your own, whether it's CEO or not. And then also just like the value base. And so, it's really hard to do these jobs. These jobs are some of the hardest jobs that are very sometimes lonely. You have to make a lot of decisions. The highs are high, the lows are low. And so you have to have this sort of value set to be able to like come to work every day and be excited and doing things. So I think that's one. And then two is I think you should be very open about where your mentors come from. And so your mentors could be people who you may have never met before. So I always talk about when in my early days in finance, there was no women in finance. I was the only woman in like the whole division. And Sally Krawcheck, who was always in the press, I think she was at Smith, I forget where she was at the time. And like, I literally would cut every article I'd read about her. And it was just sort of like such an inspiration about how she worked and thought about the world. And I took the cues on that. And there's just so many people who are so open and thinking about like talking about what they're doing and how they approach their work in their blogs and things like that. So thinking about like who you would follow, and obviously I would recommend AVC, but there's lots of other people who will start to resonate with you. So if you can't get to, I was really fortunate that I've, been able to work with, both some great VCs as well as some great founders. But if you don't have access to that, there's just so much access on the internet. Like it's just so great. And I learn every day when I'm, reading about how people are thinking about the world.
Yeah, that's great. I think we should get to the Q&A portion as we start to wrap up. We have a 7 o'clock stop. I see some good questions coming in from Nathan, but I'll give it over to Mike to pick and choose which ones he thinks is best fit, as he's been keeping a tab on the questions. Mike, you want to take over?
Yeah, thank you. I mean, this has been awesome. I've been so far, and I mean, Beth, you've interacted with some of the. I mean, you got into with the best people in the game. Jerry Colonna is like a legend, so that's awesome that you know him. I've listened to a few podcasts that he's been on, and it seems like he just knows everyone, and he's just like such a good guy. It seems like he's getting more into like coaching and stuff now too, which is really cool. And
yeah, he's been a coach for a while. I mean, you remember he's a very successful venture capitalist, and then made the transition to coaching, which is an unusual path, but it's very well suited for him.
Yeah, no doubt. So a couple things, we're gonna get into Q&A. So if you do have a question for Beth, now's the time. Throw it in the chat, and then we're gonna get to these. I'm also going to run a poll right now just so we can get a gauge on like what people need the most help with, or what they're struggling with, or what their pain points are as a startup or as a founder, entrepreneur, whatever as well. So you'll see a poll going on as well. So we have a question here from Nathan. I know there's some industry standards here, but for people, maybe if they're doing their first raise, if they're doing their first startup or whatever, how much, when they're talking to potential investors and things like that, how much equity should they be giving away? Like maybe we can go for the example, every round's kind of different, but maybe go for like a typical seed round or series A. Like what, if they're not familiar, right, and an investor might know that, they might get taken advantage of or something, right? So what, I mean, obviously you can kind of throw out your typical numbers and then maybe go for what you think founders should look out for and definitely not do if they're getting approached by investors and stuff.
Yeah, I mean, the rule of thumb is 20% dilution per round. Particularly in the, later seed A, B, the way that those funds work is getting as close to that 20% number sort of makes the economics work for those funds. So that's pretty standard. I think it dials up and dials down slightly depending on the situation. So like right now, if you have a great partner who wants to give you probably a little bit more capital than you might have originally thought about raising, there's so much uncertainty on the market, it might make sense to take a little bit more dilution just to get that capital sooner. And then vice versa, when things are really competitive, you can sort of negotiate slightly down from that, but that's about where it should be.
Gotcha. Okay, fantastic. We had another question. Actually, a couple of people were asking about it. You kind of got into it as, just like doing a cold email and getting in touch with the right people and right time, whatever. And obviously, building, you were even successful before that. But if people maybe are interested in venture capital, right, from what I've seen, it seems like there's two kind of traditional routes. Either you were a founder before, right, and then you got an exit or whatever, and you kind of got into venture after that, or you went through kind of like the Ivy League, business school, MBA, Wall Street, or just like that connected network, right, of like the high level business schools, and got into venture that way. If people maybe don't fit into either of those buckets, but really want to get into venture, maybe how would you recommend, them doing that? Or is that what you would recommend them doing? Like try to get into one of those schools and network with the right people or start a successful company and get into it that way?
Yeah, I think, I'm a believer that the schools as a signal is going to be less and less over time. We're already starting to see it. So I think the best way is to start doing the job. So whether you're investing your own capital, which is like kind of hard to do for many people, but even if it's small checks, building relationships with early stage companies so you're sort of in the flow of how things work. And, and then in turn, building relationships with venture capital firms. I mean, that's showing that you can actually think about the business in that way, I think could help. That said, the pool, I think hiring partners is a whole different ballgame than hiring more junior investment staff. So it's just a matter of time. So if you make it easier for people to understand who you are and what you're all about, that makes it easier for hiring. And so, we just concluded a search for, a couple of people at our investment team. And of course we go one of the screens will be things like GPA and school and things like that. But if there was anything, we also ask questions about like, what would you recommend as an investment? And if you're thinking in that way, I think that's, and demonstrating that, I think that's helpful. But I think the third way is the cap, how you get yourself on cap tables so people notice you.
Gotcha. That's really cool. We'll keep asking some questions, guys. I have one here too that I love asking VC investors, but also just like people who have been kind of like in the game for a while. With especially right now this time, I think we're going through a massive transition. There's so many industries that are either just getting completely accelerated. I mean, everything was going online and virtual anyway, and then this just like made it happen overnight. So I'm curious, right? Like if you were going to start a company right now, what would you do? If you don't have anything necessarily specific, what industry or maybe kind of like direction would you be going into?
Oh, that's a good question. If I had a really good idea, I'd probably be an entrepreneur and not a venture capitalist. So I'd say,
what industries are you most curious about right now, or think that are going to have a huge impact going forward in the next like 5 to 10 years?
Yeah, I mean, I think on the consumer side, I think the whole social graph is going to change. So I think there's going to be a movement towards more verticalization and more closed networks that make sense, and sort of the tools and services around that. I'm really excited about just gaming generally, both casual games as well as sort of the more traditional games, and the picks and shovels around like how do you from whether it's training or betting or whatever it is around that. I think it's really exciting. And I'd say I probably lean because I've been in operations for so long. If I was going to start something, it might be more along the lines of like a next gen 3PL or software for same day and next day delivery, or rethinking sort of that whole process. But there's also a question around how big can those businesses get.
Gotcha. Okay, fascinating. Yeah, I think the esports that space is just about to blow up. It's going to be crazy. We have a couple other questions here. I think this one's pretty interesting. What are some of the best channels to network remotely right now, or resources, right? And there's another question on your favorite books. Maybe we can, I know Charlie was kind of asking this as well about, other resources and stuff, but what would you recommend people do to network or just grow their network right now? Cause they can't go to events and in person and stuff. We're really trying to do as many virtual events as we can. And, with our platform and everything, it's a huge part of what we're doing. But besides, that, where do you think people should be hanging out right now? Or how do you think people should be growing their networks?
Yeah, I mean, this goes back to being very directed around who you want to meet. And I think in some ways this kind of takes that sort of middle layer out. If I show up to this cocktail event, I hopefully will meet X, Y, and Z people. But it does require you to really lean on your existing network. And I'd say, when you look at, the percentage of people who get hired or deals that get done, they're usually in tertiary relationships. They're not in your strongest relationships. They're the ones that you get connected to. So I think that's a piece. I think also not being afraid, I think everything has sort of moved to Zoom, that you could still just pick up the phone, and that the lift and the pressure around it is not so big, not so much. And so could you do, you sort of in the agent world, sort of roll your calls around touch points around people, and I think that's super important. And just let people know what you're looking for, because I think that's the thing that I think people underestimate, is the connections that their connections have.
Yeah, no, I think it's huge. I mean, and I think following up with people is big. It's one of the things, just today I followed up with someone I haven't for in a while, and it was instant reconnection. It was great. We just started you just rekindle that flame. I think it's really huge, especially with investors. I mean, I don't know how many founders send you follow-ups and you're on kind of an update list, but from what we've seen, it's been really important as well, just keeping the relationships going.
Yeah, it's good. I mean, there's a balance, right? You don't want to spend too much time doing that, because most of what you want to do is execute on your business, but you want to have it warm enough that when you're ready, you can move on it. Exactly.
We'll get into one last question. I think this question's actually super relevant for the time right now as well. With what we've seen over the last few years has definitely gotten better, but there's still a big disconnect with minority, Black-led startups and getting funding and stuff. We have a question here, right? What is there anything that they should be doing, or what do you recommend them to do as a way to just get the introductions, get in the door with some investors? Are there any strategies that you think have worked well that you've seen for them to expand their networks, get access to funding? We're trying to actually figure out a way to do this as well. We just started doing pitch competitions. We're thinking about doing kind of a minority only one, or a Black-led startup only one here coming up soon too, as a way to just help with this problem. But I'm sure you're probably getting asked this a good bit now, more than ever too, but do you have any thoughts on that, and any advice?
Yeah, I mean, I also, to the point that you just made, I think it's also really important to have sort of the network in order to refine and improve your pitch, because it's really, at the end of the day, about that, and the more reps you have, the better. But going back to your question, I think there's a couple things. I think it goes back to the same, figuring out sort of the connections in your network. But there's also groups I'm a part of All Raise. All Raise is not just about women, it's about all underrepresented minorities, and getting sort of more people both in the check writing positions as well as funded. And they do a really good job. I get pinged every week with, companies that they, in areas that I spend time in. I'd also say, when you think about targeting, and this is across the board and not for, underrepresented minorities, but as you think about targeting investors, do your research and get in front of the ones that your company is going to resonate with the most, because you can spend a lot of reps talking to investors that are just not interested in your space, and might take the meeting because of a relationship, or take the meeting for some other reason, and you just don't have a lot of time. And you're going to have to go through, even for the people who are really excited about your space and business, the hit rate's low, right? So I see hundreds of businesses each year, and I do 1 to 2 investments a year. So and every single investor that you are speaking to, it's the same. So, I think that's the other piece of advice I'd give. Yeah,
no, I totally agree. That's one of the biggest things that I've learned, talking with investors and raising money over the last couple of years for Entre, is find the investors that are in your space, because you're going to waste your time trying to hunt down other people, because number one, they're probably just not going to get what you're building anyway, because they're just not interested in that, or they don't know enough about it to understand what you're building. So I think that's huge, is finding the investors who have invested in previous companies, similar space and whatnot. I think that's huge as well. And at the end of the day, in my opinion, it's all about proof of concept traction, right? Like, no matter who you are, where you are, whatever, if you can build something, you can show there's a lot of people that want this or are using it or whatever, and you're generating revenue, and you just build a great product or a great company, the money will find you. I strongly believe that. And, you know, I think like I think the conversation needs to be like, I think it needs to start happening more and more though. And, you know, we want to do our part to figure out how can we at least level the playing field and make entrepreneurship more accessible and startups more accessible for, you know, minorities and, you know, diverse founder groups and whatnot, if we can, right? Like this is all the stuff that we're trying to figure out ourselves, is how can we support the entrepreneurial community as a whole, and figure out ways to level the playing field. That's what we're all about, right? With Entre, making it accessible. So it's a tough problem. Like it's really hard.
And look, this is a massive social problem, and what we just talked about is a very high level approach. And so you're starting to see, SoftBank just announced a new fund today, focused on these communities, and that's just a start and just scratching the surface. But hopefully we'll start to see these numbers really move, both from the standpoint of like how venture firms think about, I think it's a lost opportunity. And so whether if you think about female founders or other underrepresented minorities, if you're not looking at these businesses, you're not seeing everything out there. But making sure that firms, and I should making sure, like getting to a place where firms actually think about their pipeline in that way is hopefully where we're headed. But there's a lot of work to be done.
Yeah, no doubt. And for everyone on, to shoot me an email, connect with us. We do have a lot of contacts in the space, and investors and whatnot. Like we're going to try to introduce everyone to the right people. And we're going to try to do, a pitch competition or some type of giveaway, with just like some straight like cash, for some, Black-led startups and, minority startups. So Beth, I think that pretty much does it for time. Charlie, do you want to do any closing remarks, or Beth?
Yeah, I just want to say thank you, Beth. I really appreciate your time. We do ask one question to kind of close out. But before we get to that, I just want to mention in that group chat, A16Z and Andreessen Horowitz did raise that new fund, the Talent X Fund, Opportunity Fund. So check out that. I know Nahal Mita, who we've had on the show, is taking mentorship on anyone under his wing right now too. So there's a lot of opportunity. We'll try to help you guide if we can. But Beth, just closing remarks, personal mantra, ethos, or words to live by that you could share with the community.
Make today better than yesterday, or tomorrow better than today.
I think that's relevant for what's going on. So let's do that.
Yeah.
Thank you.
No, thanks for having me. This was great. If you have any questions, and I saw a bunch that we didn't get to, you can reach me at beth@firstmarkcap.com.
Okay.
Take care.
Beth, thank you so much. For everyone who's sticking on, Beth, you can head out if you have to run. But for everyone who's sticking on, we are going to do some networking. If you do want to meet some of the other attendees, we are going to do some breakout rooms